and welcome traders. Happy Wednesday. I am Rachel Dishell, Senior Manager of Trading Services here at Charles Schwab and your host for Trading Price Patterns. Now, this is a class that we make the assumption that you're already familiar with some basic concepts of technical analysis, and we'll build on those to formulate price pattern formation trades and talk through some of the important factors there. Now, I am joined in the chat today by my colleague, Mike Fairborn. Please feel free to chat in your questions, comments, requests during our session today. And please give us both a follow on X. I am Rachel-CS. He is Mike Fairborn, CS. And please like this video, help other traders find out more about price patterns, and please subscribe to our Schwab Coaching, Trader Talk Schwab Coaching page on YouTube. Now, I'm excited for some of the formations that we're going to talk through today. We're going to talk again about trading failed patterns too. So we talked about this probably about a month ago now, and trading failed patterns will provide a lot of information as far as kind of the direction of the overall trend and conviction into taking some of these trades. So we're going to talk more about that today. So before we get started, let's dive into some of those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover today is for general informational educational purposes only and should not be considered any type of recommendation or advice. And keep in mind that we are going to go through the paper money software application. There are some major differences between paper money and live, so keep that in mind as we go today. Now, as far as our agenda, we're going to start this class the same way we always do. We're going to start with a high-level market overview. Then we're going to go through and discuss price pattern formations. We're going to place new example trades, go through our trade management, and then we're going to round out the class with a watch list of our forming or in formation of price patterns as well. So that's kind of going to be our agenda for today. But let's dive into Thinkorswim and start with our market overview here. So we have had a little bit of a pullback in the overall market, just looking at the S&P 500. And I wanted to make note of a couple things here. I know I called out one of these breadth indicators that we can look at in one of my classes yesterday. And since we're getting a little bit of a signal from it, I wanted to talk a little bit more about what this may mean. Now, I think many market participants can see that we have had some narrow leadership. We have had some very weak breadth, which is kind of interesting given that we're only a week away from those all-time highs, less than 2 percentage points away from all-time highs, and we're still coming off of some of the weakest levels of breadth where we have nearly about 50% of stocks above their 200-day moving average, above their 50-day moving average. We have new highs lists on the New York Stock Exchange really kind of hitting new lows. And we have the New York Stock Exchange new lows list kind of peaking up. So I thought this was a good chance to kind of bring another type of indicator to talk about this today. Which is that McClellan oscillator. For those of you that are not familiar with the McClellan oscillator, it is essentially a breadth measure, and it's taking a 19-day exponential moving average minus a 39 exponential moving average of net New York Stock Exchange advancers. So it's taking all the stocks that have been advancing, declining, taking the net amount of advancers, and smoothing those over with that difference between those EMAs. And essentially what it's giving us is it's going to give us overbought and oversold indicators above 100 and below negative 100 respectively there. And so what I want you guys to notice is pretty much every single time that we have had these washout levels in breadth where it has become oversold and reverts back above that negative 100 line, this has marked bottoms in the overall S&P 500. So I want you guys to notice this. So we had a little bit of a pullback there. We had one back in October. Same with November, December, we hit a major low there. And then the same with April or end of March, beginning of April, where we had that exhaustion gap. And right now, It's looking like we did just carve out maybe another possible major low here for some possible expansion to the upside in breadth. So we did get that signal today, the cross above the back above oversold levels, giving that breadth thrust signal there. So that could be maybe an indication for some traders that are finding conviction on buying this little dip that we're seeing here in the market. And what we're also kind of seeing, if we zoom in a little bit further, we can see here, we didn't necessarily even hit our 20-day simple moving average here, coming in right around 7,300. And today it looks almost like we're going to get a possible hold. So a possible close above the high of the low day is what it's looking like. So you can see that firm level of 73.30 seemed to be that level of support that was touched a couple times, and we're getting that little bounce today. So thought might as well show you guys a little something different from what you may be typically seeing in this class or with the overall markets. Same thing that we're seeing with the Russell 2000. I guess not necessarily same thing, but we're seeing a bounce from the Russell 2000 as well. I know Kevin and I kind of talked about this on Trader Talks this morning. We have those long lower wicks that have just shown that this level, especially from the prior highs, has just been met with buying pressure that we're seeing here. And right now, it looks like the Russell 2000 is trying to claim that 20-day moving average. But for those of us that are looking for holds, a close above the high of the low day, those bounces, confirmed bounces, this is definitely what small caps is giving us here, is that strong power move above that high of the low day. Still a couple hours from the close, but still looking like we are in a good position there with specifically small caps. So that could tell us that we're probably at a short-term high in rates here, maybe seeing that kind of fall off a little bit, even as crude prices tend to slide here. So let's take a look at some of our price patterns. So I talked about how we're going to look at price formations today, like we always do, and then we're going to talk a little bit more about failed price patterns. And we've talked about failed patterns a few weeks back in this class. I thought it was a good one to touch on again because when a pattern fails, that can almost be more powerful than when a pattern completes. And so by a pattern failure, I mean that price does break out in a certain direction from the pattern, but then ultimately that becomes a failed move and price re-enters the pattern again and moves in the opposite direction. So a lot of times failed patterns can be a little bit of a liquidity sweep. So maybe you're seeing some liquidity hit the market, you're seeing stops getting kind of swept out or wiped out before kind of move back to the upside. So that is typical of patterns. Patterns don't always meet our measured objectives. We always talk about in this class how price patterns are not guarantees. They can fail all the time. And the power is in having a plan if they do fail and being able to change your mindset, change your direction, change your bias when the conditions and the information do change. So we're going to talk a little bit about that today. So let's look at a few different examples, Newmont being one of them. So I'm going to take off some of this information from below and the moving average here. And we're going to look at the price of Newmont for the last couple months or so. Okay, so when we're looking at this pattern, I drew a couple different lines on the chart here where you can see those gray zones. Now you can see this resistance up ahead that's been touched multiple times. You can see price kind of came up here, touched it multiple times, and formed almost like a double top or triple top type pattern that we kind of saw here. And the reason why we call it a double top or a triple top pattern, however you want to look at it, could be a triple top because you do have that one high here and you have the high on the left, high on the right, is it could be a triple top because we had price leading up into the pattern. So when you are looking at a price pattern, you want to understand the context of where that price pattern occurs. And so if this is occurring at a top in price or after an ascent in price, it is likely to be a reversal type pattern in this case, which is kind of the start of what we've kind of seen. We have seen this break below this level of support. But right now, it seems like price is trying to make its way back up into the pattern. It hasn't made its way back up into it yet. So this could very well just be another resistance touchback. So sometimes we have price breaking out, it goes back for one more last retest to firm up that level of support or resistance, which could be what we're seeing here. But this could also be the start of a possible failed pattern as well. So if we would have taken a trade to possibly take a short position, or maybe we bought a put or something like that as we saw price breaking down through support, we may want to be cognizant of some of these levels if price is about to reverse to the upside. So what we could actually look at here is where would we possibly want to take this trade if price does reverse? Because if price does reverse and it does re-enter back into the pattern, we have a couple different levels that could act as a magnet for price. One of them being this massive gap between 112 and 115 here. But even probably a more important level that we're kind of seeing is this price that's firming up right here around these highs of 120, 121, where we saw that price touched multiple times over the last couple months or so, or month and a half or so. So what are some levels that we may look at if we are trying to trade this failed pattern? Well, we may look for a decisive move back above this level of support. So we know that right here, this was our breakout candle. So, and this is what a lot of traders may use as kind of like their pivot to re-enter the pattern, or as their trigger to say, hey, price is breaking down back again, kind of the way the pattern suggests. And so this would be kind of like our trigger candle here. So if I take a price level here and I just put a little mark at where that high is, a trader may actually look for a close above 108.11 as a level of confirmation that price has re-entered this pattern and may move to the upside. Because a lot of the times with these failed moves, they do become fast moves in the opposite direction because liquidity sweeps, it pulls out some of those orders, and then you have the market that's met with that level of demand that can push it to the upside where you have that further level of supply that we saw that first firmed out the pattern in the first place up here right around 121. So that would kind of be the level for a bullish trader here to say, hey, if this re-enters back into the pattern, we may enter into a trade above 108.11 and target this upside right around 121.30 or so. Now, if we're a bearish trader and we're saying that, hey, we think that price is just going for a little bit of a touchback and we think that it's going to continue to the downside, well, we may use this pivot low here and say, hey, if we do have a close below this pivot low here, that's where we may take a short trade. Of course, there's risks with shorting stocks, obviously. You the price of the stock could possibly go up to infinity. So there are many different ways that traders may look to quote unquote short a market. So possibly using puts, a a different combination of strategies to put more of like a bearish bias here, but essentially that may be the level to look at there. Now, there can be certainly things like momentum that may give us hints to what price is looking to do. So let's put a little bit of a momentum indicator on the chart to just kind of see if we have any hints to see what's going on with momentum. So I added the RSI first, but let's start with the MACD. And let's just take a look at the moving average convergence divergence. Okay, so this essentially just takes two lines. You have the MACD line and you have the signal line. And so each of these lines, this creates like a histogram of when these lines get further apart and closer together, which is how you're getting those green and red measures. So as those lines expand, that's where you have the momentum expanding to the upside or downside where you're getting those bright greens or those bright reds. Once you start to have those, the MACD line and the signal line kind of getting closer together and compressing a little bit, that's where you're going to have the waning momentum either to the downside or the upside. And so right now we're actually seeing some strong momentum to the downside that's saying that, hey, this could be a just a little bit of a support retest here, or I guess a resistance retest, I should say. But if it does surprise us and momentum does continue or maybe start to wane here with a break above that level of resistance, that could give a bullish trader even more conviction into adding to that trade from the reversal side of things. Now, I did see a survey there in the chat. So if you guys can please take the just probably 20 seconds and fill that out. There's just two questions in there. As you guys know, I love to hear your guys' feedback, whatever it may be. I love to hear suggestions for this class. It allows me to bring new ideas or concepts to you guys straight from what you guys are wanting to see. So please definitely take time to fill that out here. So let's set up a trade for a possible reversal. Just kind of saying if this does move in our direction, what could be this possible reversal here? So let's set up a trade. We're going to actually look at a trade in both directions. So we're going to take a bullish trade and we're going to take a bearish trade, but we're going to start with the bullish side first. So let's say that price does fail here, it re-enters the pattern. We're going to use some of these levels that we already talked about, that we already marked out on the chart. And so one of them would be the entry right around 108.11. And I'm just going to use a simple stock order for this one. So we're just going to use the common stock and set up a first triggers OCO bracket here. And so I'm going to use my 10,000 OCO that I've used quite a bit in this class to just say we're risking not more than 5% of our account in a trade, and we're wanting to wait for price to reach 108.11 before we would enter this trade. So what we're going to do is we're going to take this as a stop market order, and we're going to say, hey, wait until price reaches 108.11, and once it does, become a market order. Now, keep in mind with stop orders, there are risks that that activation price and that fill price may be two different prices. So especially if the stock gaps up overnight, gaps down overnight, some other factors like that may play into you not necessarily getting filled exactly at or near where your stop or your activation price was. So we're going to say wait until the price reaches 108.11, and if it does, we are going to target our upside right around 121.30, which is where we saw that upside resistance right up here. So we're saying, hey, maybe this is just a failed double top or a failed triple top. And if it moves back up, this tells us that this is more of a continuation pattern, putting price back into this range, back into this box. And where could price possibly find itself? Well, up right around 121. So then we can use our downside. We can use the low of that pivot candle as our downside. So we could say 104 would be our downside risk. So 104.13 could be the level that we want to get stopped out at if this does not work in our direction. So these are all good till canceled. Again, same risk with the stop order there. We're going to hit confirm and send, and we're going to send this to our price patterns class. Okay. So we have that in there. So that is a bullish type of trade. Again, that is when we are trading a failed pattern, but again, we're waiting for confirmation or we're waiting for that move, not necessarily anticipating it, but we're setting up our order, we're setting up our process and our rules if price does what we think it may do. So that's one way to trade this. Now, the nice thing about being a trader is if you see a setup and there's a 50-50 shot of price moving in either direction, you can position yourself in either way. What's important to know is that you have your rules on your entries and on your exits to say, hey, if I am right in this direction, whether it's to the upside or whether it's to the downside, I still have a plan in place. So that's going to be the next thing we're going to look at here is if this does end up being a true triple top formation like we think it may be, where could price possibly find itself and where could we position for that possible trade to the downside? So let's take a look here and what we're going to do is we've seen that this pattern has taken roughly a month and a half to form. So we know it's taken roughly a month and a half to form. And we also know that from highs to lows, if we take the measurement there, that's roughly about 14 and a half or $15 or so. So if we kind of take that and we know that the market tends to love symmetry in price and in time, we may find a familiar level of support right here around some of these levels that we've seen before, right around 94, 93. Okay. So if this does just end up being a resistance retest, price could find its way back down below those levels there. So what we may do as a trader is we may say, hey, we may want to buy a put option. So we could look at current levels of implied volatility, and that could tell us a little bit about the type of volatility regime that we're in. That could tell us whether it's a more favorable time for buying options or favorable time for selling options. And in this case, if we're looking at levels of implied volatility, we're right in the middle of where we've been really over the last year. So a trader may say, hey, I may go either way with this. And so this could tell us, hey, we could possibly do a couple different strategies here. So if we're doing a selling strategy, we could possibly, with confirmation of a break below that level, below that pivot candle, we could say, hey, we may want to sell a call spread. And may we want to sell the call spread? Well, we may actually look at that old resistance as a level of strike prices where we think the price is going to stay below. So we could sell a call spread there. That's one way that we could go about this. And we know that it's taken about a month and a half for price to really find its way through that pattern. We know that it takes about a month and a half for it to reach our target. A lot of times as pattern traders, you'll notice that price actually reaches the target sometimes a lot quicker than that. So if you are looking for more of a short-term trade, that could be kind of an indication there of, hey, we could sell a call spread or we could buy a put option as well. So we could buy a put option with a little bit of confirmation to the downside, and we could say, hey, wait for price to reach this level. Once it does, we're going to buy a put option. So I think let's go that route. Let's go the put option route. We know where our triggers are going to be. So we know that if price goes below 104, that's where we want to possibly enter into a trade. So we're going to I'm going to write down 104 as the level. And then we know that we're going to run into a little bit of support, probably right around $94 or so. So that gives us about $10 of downside movement that we could possibly see. Again, price patterns are no guarantees, but for a bearish trader taking a directional stance, that could be where they may look for that familiar level of support there. So what we're going to do is we're going to make our way to the trade tab here. And since we've talked about maybe just kind of like a shorter intermediate term trade, let's look at 2 months out from expiration. Let's look at the July monthlies here, and let's take a look at what the put options are trading at. So right now we can see that we do have a lot of volume and open interest in a few of these contracts. We have tight spreads on the bid and the ask, which is showing us that there is quite a level of liquidity here. So we shouldn't have any problem as it pertains to kind of slippage or wide bid-ask spreads or anything like that. We should have no problem entering into this trade and exiting this trade. So that may be one of the things that we're going to look for here. We are going to look for an option that's a little bit in the money with a little bit of a larger delta. So we're going to look for a delta of roughly 60. That tells us that, hey, if there is a dollar move in the stock, if the stock price goes up $1, our option is going to move roughly down 60 cents or so. Now, think of that vice versa as well, because puts obviously have a negative delta, so they're going to move inversely to the price of the stock. So if the price of the stock goes down, well, our put options go up. So, and that's what we're looking to do, is we're looking to essentially take a directional trade if we do see that confirmation, and we're going to be looking at the 115 strike here. Now, we're going to do one contract with this one, and I'm going to show you exactly why. So we talked about how we want to wait for confirmation because we don't know what prices is essentially going to do next. We don't know if it's going to re-enter the pattern, and we don't know if it's going to break back down and just have this end up being a little resistance retest. So what we're going to do is we're going to actually place a conditional order on this option based off of the movement of the stock, because we're going to say wait to enter this options trade until we see that downward move in the stock. So we're willing to pay a little bit more on the option because we know that if the price of the stock goes down $3 or $4, which is kind of where our trigger level is, right around 104, we know that the price of this option is going to be a couple dollars more expensive, because that's just what the delta is telling us. So we know that we can kind of show that on the Theo price tool, which I'll show in a second here. But we want to wait for confirmation, be willing to pay a little bit more for price to actually reach that level before we take that directional stance. So we're waiting for some more information. So what I'm going to do here is I'm going to click on this gear on the right-hand side of the page. And we're essentially going to make a price condition. So for those of you that have never done this before, you're going to come down to conditions down here. There are time conditions and there are price conditions. So we're going to go to Newmont. We're going to say is less than or equal to 104. 104.13 was the level. So 104.13, we're going to say wait to buy this put option till we see that move below the previous low day there. And so what this is going to do is it's going to tell us, well, we don't know what our price of the option is going to be. I'll show you in a minute how you can kind of assume what it could be. But what we're going to do is we're going to say, hey, we'd be willing to pay a little bit more. We're going to link this limit price, since we don't know what the price of the option is going to be. We're actually going to link it to the current asking price. So whatever the asking price is of the option at the time, we're going to send a limit order right at that price. And so that's what this limit offset is. Now, if you want to say, hey, I want to come in with a limit order 5 cents below the price or 1 cent above the price to ensure I get a fill, or right now this would be sending a marketable upon entry limit order here at the current limit price. You can use these offsets for a number of different things. And that's the beauty of these offsets within Thinkorswim, is when you don't know what the price of the option is going to be, but you know that you still want to have control over the price, the limit offset really gives you that opportunity to do that. So that's what we did there. We just linked that limit to the asking price. We're putting it with no offset to say that whatever the asking price is at the time, we're going to send that limit order, and we're going to hit save here. Now, this still stays within the risk parameters of our account because we can risk up to $2,000 in a trade. And we know that if the price of Newmont is around 104 or so, it's not going to be drastically different than the current price right now. And I can show you guys exactly how to do that. If you go to Theo Price Mark here, let's just say that within the next day or two, let's say in the next day or two by Friday, price goes down $3, or let's just say $4. This will show us what the current price of our option is. So right here, if we're kind of looking, the current price of the option or the current mark price of the option or the midpoint between the bid and the ask is currently about 1167. Now, if we did see a $4 move down in the price of the stock over the next 2 days or so, we know that our delta is our strongest Greek in this case. So we know our delta, our directional movement, is going to be the strongest factor driving the price of the stock because there's probably not going to be a huge influx in implied volatility within the next 2 days, especially since there isn't earnings or anything like that. We don't know what happens with the market, so I mean, you could see implied volatility kind of spike up there. We're not going to have too much time decay within the next couple days, and so delta is going to be our biggest driving factor. So we may be spending about $14 or about $1,400 for one contract. That's still staying within the risk parameters of the account. So the most we can lose on an option, in this case with a long option, is the premium that we're paying. So the most we would be losing possibly would be right around like $14,000, the most that we'd be putting at risk, or $1,400, I should say. Okay, again, there's no guarantee on that. That's just theoretical pricing. But if you guys kind of want to test, hey, what are movements in the stock? What are volatility? What are time? How are they going to impact my option? That is a great way to do that on the option chain. So we're going to hit confirm and send here. We're going to send this to our price patterns class. So as you guys saw, we don't necessarily have to have, in this case, I guess, a strong conviction right now either way, but we can position ourselves to have a conviction once price does give us that confirmation, because price is what's going to give us that conviction. And so you can kind of position yourself ahead of those moves when you're kind of in that position of could price break either way in this case. So let's take a look at the chat, see if there are any questions here that we are seeing. Let's see. I don't see anything. I don't see any to, I guess I do have a question. Okay, so I had one question about, are we going long or short on Newmont? And we went both. And then I had another question about how do we find these stocks that have these range trading patterns? So the easiest way to find some of these stocks in the market, I know everyone kind of wants that secret sauce to narrowing down a list or identifying price patterns, but coming from someone that looks at a ton of charts throughout the week, I will say the easiest way to spot price patterns is just to look at a lot of charts, honestly. So some basic things you could do is putting in certain filters like liquidity, the price, maybe looking at stocks that are above longer term or below longer term moving averages, maybe different momentum regimes and things like that to filter the list just a little bit. But the easiest way to identify these patterns is just to spend the time to look. And you can honestly go down through a list of patterns, spend a couple seconds looking at each one, and your eyes, because we're trained as humans to be able to spot patterns, we're able to spot symmetry and things like that. The more that you practice it, the quicker that you'll become at spotting some of these patterns. So I would say build that watch list, narrow down your universe, even if it is 100 stocks or 200 stocks. you can still get through that list pretty quickly because your eye is going to be automatically driven to the current price action, and your brain is trained to look for patterns. So you're definitely seeing a lot of range patterns existing kind of right now as the market kind of works its way throughout this kind of almost like stealth correction phase that we're kind of seeing under the surface out of the realm of tech. So that's just kind of my 2 cents there. Now, we do have a couple other patterns here, and I'm just going to go through the watch list of patterns, and we're going to talk through some of these and what this could possibly mean for traders taking directional stances on some of these price pattern formations, just since we have a few minutes left. So a couple different ones. Ulta was a major one that stood out to me. This is a massive head and shoulders pattern. You can see that price leading up into the pattern was ascending. So price was in an uptrend leading up into the pattern. We saw a higher high being made. We saw a pullback to that horizontal level support, another higher high being made, a deep retracement to that horizontal support, and then we saw that lower high being made. And so when we start to see a lower high, kind of giving us a little bit of that shift in character, that's telling us that this could be a reversal type pattern. And we did see the breakdown a couple days ago, actually on Monday, where we saw a big breakdown with this head and shoulders pattern. And today it looks like price is trying to either re-enter that pattern or to retest this level to kind of firm up this level of resistance, really seeing how strong it is here. So a couple things with this one. The implied volatility is at the highest levels that it's been over the last year. They do have earnings coming up here very soon. Another thing that may give us a little bit of hint to tell us that this may be a little bit of a failed pattern could be looking at momentum again. And so we looked at momentum in one way on the last chart with Newmont, but I wanted to show a different way of looking at momentum here with the RSI. And so I'm going to zoom in a little bit with this one. And obviously this is a big head and shoulders pattern, but it becomes even more significant when these types of patterns fail, because when they fail, like I mentioned before, they turn into fast moves in the opposite direction most of the time. And so a trader may be looking at this divergence that may be forming here as price made a lower low. The momentum indicator on the RSI actually made a higher low and is kind of bouncing from some of those levels. So a trader may wait for confirmation. A trader will wait for confirmation for a decisive close above this prior neckline. So maybe they're looking for a 2% move, maybe a 3% move. I know in this class we talk about that 2% move quite a bit. So that could be looking for a little bit of confirmation, maybe almost here, right around where we're seeing that price kind of rallied up into prior to that. But again, we have that big earnings announcement coming up. So typically not a really good time for traders to consider buying options, just because the heightened levels of implied volatility. These are the most expensive premiums that you're seeing really all year, volatility speaking. So keep that in mind, but those may be a couple levels to watch. If this does end up being a failed pattern, where you may see a move to the upside first would be right around that 580 level. You see that there is a huge previous earnings gap there. You also see the right shoulder really taking shape there. And so there's quite a bit of levels there. And for a trader that is looking to trade this type of setup, if there is a move above 505, you are likely looking at quite a bit of upside, a quite favorable type of risk to reward setup here occurring right with Alta. So this could be one of those scenarios where a trader may look to possibly sell options or may look to just trade the common stock as well in this case. So giving you a couple different levels there. And then a couple other charts that we kind of saw taking shape here. Another one that's looking like it's going to be a setup for a failed pattern. That's why I kind of wanted to bring some of these to your guys' attention today to just kind of give some of these old support, new resistance levels to really keep an eye on. And this one looks like this would probably be a move above 164 that would give traders confirmation to take a bullish trade in here. But this is looking like a little bit of a bullish possibly a bullish engulfing candle right there at these lows. And look where this is occurring. You're seeing this occurring at some of these levels, familiar levels that have been bought up multiple times. That lower wick is giving you a lot of information to tell you that, hey, that level was met with a lot of buying pressure there. And so traders may be looking for a move above 164. They can manage their risk to the downside right around 155 or so. And to the upside, well, you're looking at quite a bit of upside right around 197, 198 or so. So again, another one of those favorable risk to reward setups for a trader that is looking to possibly trade a failed double top pattern in that case. Couple other ones here. We're just going to cycle through the watch list. We had a rising wedge take place in APD here. So essentially, we just saw those two trend lines kind of move at different slopes, different paces there. And a trader may take a measured move from the widest part of that wedge to just kind of measure this here and measure it from the breakout point to give us a little bit of downside, which could give us downside all the way to 273 there. So if a trader wanted to take a bearish trade with the break of that falling or rising wedge, they could be looking at another $15 in downside potential there with APD. Now, some interesting formations actually occurring within the energy space as well. We have some double bottoms that played out. You had a double bottom that played out in ExxonMobil. So you saw here the double bottom really taking shape there, looking like it's going to retest that level of support. But you're also seeing that happen across this space. You're seeing that in Chevron here as well with that double bottom. You're also seeing that with ConocoPhillips shaping up like it wants to form a double bottom almost. So just a couple different levels there. Of course, traders will wait for confirmation, wait for those moves above that level of resistance to really call it a true double bottom. Other than that, it just ends up being a continuation or a range within some of this range bound the range bound market. And then a couple other patterns for your watch list. We're seeing a little bit of a triangle formation in Devon Energy. So could break either way. A trader may take the widest part of this range and project it to the upside or downside. So it could give a trader conviction in whatever way it breaks. And then same thing with APA Corp. So similar thing. We're having a little bit of a bearish engulfing candlestick actually at this level of resistance. So traders may look for price to find its level at support, probably right around 36 or so there. So I did have a question as far as the any good resources to understand these different candlestick patterns. Yes, we have a ton of really great resources. We have an entire technical analysis library actually under our education tab. I would say first and foremost, subscribe to our Trader Talk Schwab coaching channel because I know Barb Armstrong goes through her getting started with technical analysis class. If if Mike, you want to put the playlist there, and she goes through a ton of these candlestick patterns. But if you guys want even more information, if you guys go into the education tab and under this center sub tab, there's actually an entire technical analysis library. So if you actually click on that, this will give you all the technical indicators, but also various patterns in for classic patterns, like some of the ones that we just talked about. So you'll see classic patterns, how they really play out, and then you'll have candlestick patterns too. So you have the bullish, bearish ones. We talked about the engulfing quite a bit today. So this will talk about a bullish engulfing versus a bearish engulfing. And so it gives you a little description, and then also just how it looks in the price, what price is leading up to and following it. So hopefully this helps. If you guys found this useful today, please give us a thumbs up. Please subscribe to our channel. Thank you so much for Mike for our help in the chat there. And thank you everyone for filling out that survey. I look forward to reading some of your results. Please give us both a follow on X. I'm Rachel-CS. He is Mike Fairborn CS. And I hope you guys have a great rest of your week. See you later, traders.